Hey traders, Gavin McMaster here from Options Trading IQ, and today I'm going to give you an update on some of my wheel trades. So lots of lessons to learn and some exciting stuff on this video. Just a quick reminder, everything discussed is for educational purposes only, is general in nature and does not take into account your personal circumstances. So let's get started. So first up is EWA. This one's been doing quite well. This is more of a longer term position for me. And one of my bigger ones, EWA, is the Australian ETF. So you can see this one was started back in Feb 2023. The stock's up about 9.5%, and my trade's up about 30%, about 11,000 in P&L. So doing pretty well. I've got 1,400 shares in total. Average purchase price sort of 23.24. And at the moment, the stock is at 26.32. So it's been a pretty good performer. Pays some really nice dividends. As you can see, I'm getting some good dividends every 6 months here. At the moment, I've sold 12 of the 25 October calls. So that's against this lot here, or this tranche. And I've got sort of 200 shares here that are uncovered. So a little bit of extra upside potential. Those are obviously in the money at the moment to the tune of $1.32. I don't really want to have these shares called away, to be honest with you, because I'd like getting that yearly dividend. So as we get closer to October, when the time decay is minimal and it's looking like these are a high chance of getting exercised, I'll probably look to buy those back and resell for another 3 or 6 months into the future and try to get them back out of the money potentially. Let me just update the value here. So this is currently worth 1181. So that's what it would cost to buy them back. And that actually increases my profit, which is nice. So what's the value of those at the moment? The market price is about 217. So a quick little thing you can do just to see whether they're going to get assigned or not. That's the value of the option at the moment. If we take that minus 25, that's how much intrinsic value there is. And the difference is the time premium. So we can see still quite a lot of time premium there. So I'm still getting some good time decay, and they're very unlikely to get assigned with that much time premium still available. So this is the option price. This is the intrinsic value, and this is the time premium. So really quick little calc that you might like to do with your covered calls just to see whether they're likely to get assigned or not. If this starts getting down towards 20 cents, or if there's a dividend that's coming up, that's when assignment risk is a lot higher. So I'll need to keep an eye on that. But at the moment, no chance really of those being assigned. So all good. The next one is EWZ. And again, this is another fairly long-term position, started back in 2023. The stock's had a pretty rough run, down about 17%. But as you can see, thanks to option premium and dividends and dollar cost averaging, I'm actually up 5% on the position. Total P&L of nearly 1,500. So it really shows the power of the wheel strategy. Sometimes you have to be patient. It takes a little bit of time for these things to play out. Current position at the moment, I've got 500 shares that were bought at 32 and another 300 that were bought at 28. And I've sold covered calls against each of those tranches. So the shares that I bought at 28, I've sold calls at 29. And just today I got filled on some calls up at 34 for the December expiry. Not generating a huge amount of premium, but it all helps. If we remove the filters here, you can see all the trades. And if we remove some of the buys, what we'll have left is the option premium and the dividends. And you can see here a total of 3,400 in option premium and dividends, which is where all the profit is coming from. Obviously, we're down a little bit on the shares. If we just look at the share position, and this is where it really helps to be an option trader rather than just a stock-only trader. The actual share position is down 1,300. So even though we dollar cost averaged, because the stock's down so much, we're down 1,300 on the shares. But again, thanks to the option premiums and the dividends, in profit overall, which again just shows the power of the strategy. And I'll just get rid of that and we'll just be left with the open positions. If you want a copy of this wheel tracking spreadsheet, I'll save a link in the description below. If we go and look at the chart of EWZ, you can see it's really starting to break out now, which is great. And we're seeing a lot of accumulation, which is also a really good sign. And we're above all these moving averages. So looking really, really good. I feel pretty confident that that might get up to, might get called away at 29, which is fine. And then the last tranche may get called away at 34, which would be great because we'd have a huge profit there. The other thing I may do is buy back those short calls if I want to hold on to the stock and keep getting the nice dividends that this one pays. Pays about a 6% dividend. I think it varies over time, but yeah, roughly 6% dividend, which is quite handy. And if we look at a long-term chart, back to when sort of the position was started. I think it was about December 2023. So it was really started kind of almost at the top here, which wasn't ideal timing. It was pretty much a straight run down, a little bit of a bounce, and then bottomed out around 22. I was selling puts down here that expired worthless. So again, that's sort of helping generate option premium, reduce my overall cost basis, and now we've recovered really nicely, which is good. Next one is FXI. This is also another long-term one. I haven't got the start date here. Let me just fill that in. This was started way back in June 2021. And you can see the initial assignment was at 45. If we go and we'll just look at the stock buys and sells, bought 100 at 45 and then just continued to dollar cost average when my puts were assigned. Ended up getting called away at 30 on this lot of 300. So made a nice profit on this lot of shares, about 880 on the shares. But this lot is still showing a loss of about 824. So on the actual share purchases, pretty much flat. That all of the profit is coming from the option premium and the dividends. So here's all our cash secured puts, covered calls, and dividends, 2,600 in total. Let's just get our regular position back. So look, it's been going for a few years, so it's not an amazing return, to be honest. On a yearly basis, it's been a bit of an underperformer, even though we've outperformed the actual stock price. Overall, this isn't an amazing return for a couple of years, but happy to be back in profit here on this one. And I'll be happy to get rid of these shares at some point and maybe just not have any exposure to China, maybe reallocate that capital somewhere else. TLT is another one that has been a little bit disappointing. The ETF is down 10%, which is a pretty big move for a bond ETF. I'm in slight profit here, but again, when thinking about opportunity cost, it probably would have been better to have this capital allocated elsewhere. You can see I bought 200 shares at 98, another 200 at 92. We're currently at 88. So the share position itself is down about 2,700. Again, thanks to all the option premium and dividends, slightly in the black. And at the moment, we've got covered calls up at 100. So fairly likely they'll expire worthless. Some more covered calls at 96. Those will probably expire worthless as well, though there's a lot of time till October. And I'm on the hook to buy some more at 85 and also at 80. Happy to keep building that position and dollar cost averaging. So we'll see how that one goes. EWU, EWW, and USO, no position at the moment. Those shares all got called away. May look to re-establish them at some point. XLU is a pretty small position, pretty slow moving, little bit of underperformance. The stock's up about 3.5%. I'm only up about 1.2%. We haven't been assigned on anything there yet. So just continue to generate some option premium there and we'll maybe get assigned at some point. Now, the rest of the examples are all Australian shares, so may not be relevant to some of the US viewers, but I'll go through these. The general process is still the same. It doesn't really matter what the ticker is. So you may want to stick around and watch these anyway. But yeah, ANZ, I haven't been assigned yet on any of these. We've got sold puts at 28 and 27 for the September and December expiration. The stock's down a little bit. I'm up 3.5%. So doing okay here. Slight outperformance. BHP, I was assigned on 400 shares at 38 for the June expiration. I've also sold some more puts here at 34.5, so I'll dollar cost average in there if we do get down to that level. And I've sold calls against these 400 shares at that same 38 strike. So we'll just see how it goes. Down nearly 10% on the stock, and the overall wheel position is up 1%. So outperformance, but again, not an amazing return for a trade that's been going on for 6 to 12 months. BlueScope Steel, my shares got called away, re-establishing here with another put for the October expiration, 21.50 strike. Stock's currently at 23. Since starting the position, it's up 11.64. I'm up nearly 11%. So a slight underperformance, but doing okay here. I need to add the start dates on some of these ones, which I'll do after. Commonwealth Bank, again, small position, pretty slow moving. I'm actually selling these puts deep out of the money because it's quite a high priced stock. I'd actually prefer to avoid assignment if possible. So I'm selling them pretty far out of the money, just generating a little bit of option premium and trying to generate some profit without actually having to put up the capital to buy the shares. So it's more of a return on margin, but I do calculate it on the capital that would be required to buy the shares based on how many puts I've sold. It gives me a more accurate reflection of the overall profit percentage. But yeah, technically, if I'm never going to get assigned, I could change this to the margin amount that would be required. The next one is Macquarie. This one's been a bit of a shocker, really. Not a great performer. The stock's down. It actually went down significantly, had a massive drop during April. I probably should have dollar cost averaged in, but again, because it's quite an expensive position, I didn't want to allocate too much capital to it. So not the best trade, to be honest. I'm down a little bit here, slight outperformance versus the stock price, but yeah, it's been a bit of a disappointing one. I've sold calls. I was assigned at 210. I've sold calls at 210. It's currently at 228. So that's probably likely to just get called away. We can calculate how much time premium there is there. If we do the stock price minus the strike price, that's what the options should be worth. We've got 2 contracts, so that divided by 200 would be the option price. So we know there's roughly 430 time premium remaining, and I've got 2 contracts. So I've still got profit potential of about 860 just from the time premium between now and September. So this will hopefully go into the positive. Shares will hopefully get called away at 210. I can maybe start again, or again, just move on to a different underlying. NAB has done reasonably well. This one's been going on for a while as well. I was assigned 300 shares at 38.50. The stock is now back to pretty much where it started, and slight profit on the shares of about 258. The rest of the P&L is again coming from all the option premium and dividends. So up 1,100, 5% return versus a flat stock price, which is pretty good. QBE has been okay. These ones expired in June. I'm just looking for a pullback to re-enter the position. The stock's been very strong, up 23%. I'm only up 11%. So that's when the wheel trade does underperform, when the stock has a really big rally. So look, I'm happy with the gain, but would have been better just buying the stock, to be honest. Rio, I was assigned in June at 108. I sold September calls at 112 against those shares, and I sold another put at 96. Overall, slight profit, about 1%, and the stock is down 9%. So doing reasonably well. The wheel trade's doing its job. Again, I'm on the hook to buy more at 96, or I'll sell them at 112 if it gets up to that level. So pretty happy with that position. Woodside, I had a bunch of shares called away in June, which I was pretty happy with, to be honest. I'm going to probably lighten my exposure to this one. The stock's down nearly 20%, and I'm up almost 5%. Not a huge dollar return, but considering how far the stock has dropped, I'm reasonably happy with the performance here. My last remaining 200 shares were bought at 29 and 24, so slightly down on the actual shares. I'm happy to get rid of them at 27.50 if it gets up to that level. I'll just continue to sell calls against these 200 shares until they eventually get called away. I don't think I'll sell any more puts on this one. Like I said, not a big fan of the company. Happy to just get out of this one at some point. Wesfarmers, another stock that's really had a huge rally. So even though I've made a profit, only 5% compared to the 20% on the underlying stock. These puts are deep out of the money now. I'll just leave them to expire worthless, and I'll wait for a pullback to potentially sell some new puts on that one. Woolworths has been a pretty good performer. Stock's down 6%. I'm up 7%, about $1,000. Bought 100 at 33.12, bought another 400 at 29.60. The overall share position is up 380, and we've obviously got profit of about 600 or 700 in option premium and dividends. So that one's doing pretty well. Those shares may get called away, the September expiration at 30.65, and the stock's at 31.10. So we will have some time premium remaining. If we do 31.11 minus 30.65, that's how much intrinsic value there would be in the options. If we do that divided by 400, will give us the option price. Fix that formula there. So we've got time premium of around 81 cents. So plenty of time premium. They're not going to get called away yet. We can hold those through closer to expiration. And if it stays above 30.65, we've got about another 325 in time premium that we will generate. If we look at the summary, we can see everything doing pretty well. Macquarie is the only one that's in the negative. Now, this was a different story back in April when the market was declining. There was a few negatives in here. The market's gone straight up since April. So pretty much everything in the positive now, which is great, and all generally looking pretty good. Obviously, these three here, no position at the moment because the shares were called away. Like I said, may look to re-establish those at some point, or I'll add more to some of these other positions. So thanks for watching. If you found the video helpful, don't forget to like, subscribe, and share your thoughts in the comments below. Reach out anytime with questions, and have a great day.